I don't know if you guys are hearing me. Please, if you can hear me, just detect that you're hearing me. Can you hear me?
Yes.
Okay. Well, let me share my screen. Just see what we can catch up for today. Are you seeing my screen?
Yes.
Yeah. Please turn off your camera. So what about now? Can you see my screen?
Yes.
Okay. So today what we'll be talking about, I don't know. I already sent a we have less than 40 minutes to this class. So I sent a video link to the group. So I don't know if you guys have watched that video because I will not really go back to start explaining what is trading, what is forex trading, how to trade it, um, and how money is being made, like with trading. So today what we'll be covering is candlesticks. So let me just be like that. So today what we'll be talking about is candlestick. So today, what we're talking about candlesticks. Now, a candlestick is a visual representation of price movements in the financial market. So, and it is divided into, it has like different parts. So let me just do it. We have what we call the bearish candle and the bullish candle. So we have what we call the bearish candle. So it's mostly in a red color format. Then we also have the bullish, which is mostly in the green candle format. So now this is how it is being represented. So now the candlestick are formed using what we known as the open, the low, the close. That is based on the time frame you are using. So let me type it. It's formed using what we know number one as the open, number two, the close, number three, we have the high, and the last one, we have the low. So each candlestick presentation have these four criteria: the open, the close, the high, and the low. So now this candlestick here, this for this red one, I told you that the red one is the bearish candlestick, while the green is the bullish candlestick. So the red is the bearish candlestick, while the green, sorry, is the bullish candlestick. Now, at every start of a candle, there's always an open price. That's when the price open in the market and when the price close. So now, let me use this here. So now, for a open price of a bearish candle, the, the price open at this point here. This is our open price. Sorry. At this point here, this is where the price open here. So here is our open price. Um, here, this is our close price. We have here, which is our high, and then we have here, which is our low. So now the psychology of this candlestick of a bearish candlestick is that the price usually start. This is based on different time frame. Like for instance, on a 1 hour time frame, you can be seeing one candlestick there. Why on a if you go down if on if it's on a 1 hour time frame, you can be seeing one green candle or one red candle there. Why if you go down maybe to the 10 minutes candle 10 minutes time frame, you can be seeing about 66 candlesticks. That's each candlestick presenting 10 minutes. So if you see 10 candlesticks on a 1 hour time frame, it will just be only one candlestick. So same thing with the 5 minutes. If we're on the 15 minutes time frame, we can be seeing just one candlestick. But when you go down to the 5 minutes time frame, you'll be seeing three candlesticks because 5, that's 15. So 15 makes up one candlestick on the 15 minutes time frame. So same thing with a 4 hour time frame. Now, if you're on the 4 hour time frame, you can be seeing one candlestick there. But when you go down to the 1 hour time frame, you'll be seeing four candlesticks because one hour 4 times, which is on 1 hour time frame, makes a one candlestick on the 4 hour time frame. I don't know if you understand this. So now on this bearish candlestick, this was where the open price started from. So the price opened at this point, which is here. This is because we on a bearish candlestick, we usually go sorry, here is actually our open and here is our close. So on a bearish candlestick, price usually opens at the top and then closes below. So the psychology of this bearish candlestick, how it's formed is that the price opened at this point here, right? So when the price opened here, they were able to push the price all the way to this up here. So at this top here, this is the highest point the price went to. That's here. Here is the highest point the price went to before. Then they push the price down to this point. So here it's called the lowest point price went to. Here it's called the lowest point price went to. And then we close at this point here. So this is where our close. So we open in price here. And then they were able to push the market all the way to this top here, right? So after pushing the price all the way to this top, then they were able to push the price down to this point, which is the lowest point price went to, and then we went up in price and closed here for a particular time frame. Now, let's say this is on the 15 minutes time frame, right? If we if price open at this point here, and then everything that's going to happen on this single candlestick is going to happen within that particular time frame. So if it's on the 15 minutes time frame, that means the whole of the candlestick is going to form in 15 minutes. The open and whatever will be happening in the candlestick, it will happen in 15 minutes. Same with 1 hour. If we're on the 1 hour time frame, whatever will be happening on the candlestick will happen within that 1 hour. So I don't know if you understand this. So this candlestick here is called the bearish candlestick, and here is called the bullish candlestick. So we open, now on a bearish candlestick, the open price is above the close price. So it's just like we open at the top and then we close below. That means it's just like now we are at 100. Let's say we're at a price of 100. Now we went down in price to like 10. So you can see you have dropped from 100 to 10. So that means there's a selling pressure or there's a reduction in price from 100 to 10. So that is for a bearish candle. So we went down in price. So on a bearish candlestick, the price always closes below the open. So you can see this is our close. So we close below the open. This is our open. So our open was up, and then we close below the open. This is the lowest point the price went to. Here is the highest point price went to. So, and now each of these has its name is being given. For instance, now this long candlestick that you see here, this we call it, it's known as wick. So we can call it the upper wick, or you can call it shadow, or shadow, whichever, or upper shadow, or just shadow, shadow, whichever one you choose to call it. So it's called the upper wick or upper shadow. So I think I'll just leave it at wick. Yeah, so that it will be easier for you to understand. So it's called wick. This is the upper wick. Then here is called the lower wick, or you can still call it wick if you don't want to maybe mention whether it's up or it's down, whichever one you want to call it. So I'll just call here lower wick. Then here, the whole of this, like this, the whole of this place is called the body. So if you check that candlestick Bible I sent to the group, you are going to see this there. So you just need to read it. So here it's called the body. That means that's the body of the candlestick. So here is body. So here now is our upper wick. Here is our lower wick. Then here is the body of the candlestick for a bearish candle. But each candlestick has a body, a wick, whether it's upper wick or lower wick. Every candlestick have that criteria. So now let's move to the bullish candlestick. Now, for the bullish candlestick, we usually open below and close above. So now for a bullish candlestick, this is our open price. So this is our open. Then here is our close. So this is our close. And here is the lowest point the price went to last year. Let me use this. So here is the lowest point price went to. So I'll call it the lower wick. And here it's called the highest point price went to. So here's the highest point price went to, which is our upper wick. Upper wick. So now I told you on a bullish candlestick, price open below and then closes above because we are going up in price. So let's say you start from 10. Now on a bullish candle, you start from 10 or 5, and now you move up in price. Let's say you went higher in number to, let's say, like 200. So you can see you're going from a lower number to a higher number. That means we went up in price. So now and for a bullish candlestick, we usually close above the open. So this is our open price. Now we open at this point, then market, they were able to push the price down to this point, which is the lowest point the price went to. And then we went up in price, So here is the highest point the price went to. And now here is called the upper wick, while this place is called the lower wick. Then here is the body. Here is the body of the candlestick. So here is the body of the candlestick. Here is the body of the candlestick. So this was our open, this is our close, and this is the highest point the price went to, while here is the lowest point the price went to. So that means we went up in price because we opened lower and closed above. So here is the upper wick. We have here as the lower wick. Here is the where price open for a bullish candlestick. Always note that for a bullish candlestick, price usually closes below the open. So this was our open. Then we went up in price. This was the highest point the price went to before the price went down and closed at this point. So in this particular time frame, so it just depends on the time frame that you are on. All this happened there. So now let's move to now so I'll be drawing another candlestick here. Let me use this. So there are candlesticks that usually don't have wick, while there are others that have wick. So I'll also be talking about each of those candlesticks. So this is for the bullish. So I'll detect it as the bullish. So let me do that same thing for red candlestick. I want something we say we do and now shut up now go back to kitchen. I want send out for me come online because like on the one do one copy for me, two copy for me. You go down. This for a bearish candlestick. So candlesticks have different body size. So you can see these are just an example of a different. Okay. So here is so here is a bearish candlestick. So as I told you, candlestick have different body size. So long body refers to a strong buying pressure, while short body or selling pressure. Now, if you see a very big or strong body like this, whether it's for a bearish or a bullish candlestick, it detects that there is a lot of either buying pressure or selling. So for a bullish candlestick, which is for a buy, that is we're buying, while for a red candlestick, which means we're selling. So when you see a very strong bullish candle like this, it means that the buying pressure is very, very strong. While if you see for a big bearish candlestick like this, it means that there's a lot of selling pressure. So as I told you, each candlestick have different body size. Sorry, 7.7 to 9. So now, let's say, for instance, this is a candlestick. Now, a bullish candlestick. Now, I told you for a bullish candlestick, we usually close above the open. So here is our open. So here, this is our open here. Then here is our close. Here is the highest point the price went to, and here is the lowest point price went to. So if you are trying to compare this small little cubic candlestick with this big bullish candlestick, you will notice that the buying pressure of this one is different from this one, right? Because here there was a lot of buying pressure, while on this one there was no really buying pressure, because we are even like close to the open. So we opened here and closed, so you can see the distance is not really too much like that. But why for this one, you can see there's a lot of buying pressure, that there was a lot of buying, while here the buying was not really strong enough. Same thing with the bearish candlestick. So here there was a lot of selling pressure, while here the selling pressure was not strong as this one. But the psychology of this candlestick is that we close below the open. So we open at this point here. So this is our open price, right? This is our open price. This is the highest point the price went to. This is the lowest point here. This is the lowest point price went to, and then we close here. So this is our close. So we went down in price for a bearish candlestick. So now let's move ahead. So now we'll be talking about the engulfing candlestick. Engulfing candlestick. Now, the engulfing candlestick is let me explain how the engulfing candlestick form. Now, for a bullish engulfing candlestick, so let's start with the bullish one. So let's put this here. Okay. Listen, that's I don't speak on like serious. No, I can hear exam. Now, if you look at these two candlesticks, this one now engulf this one, like it covered, just like an eagle covers their children, so she just covered it like that. So now this, or when you maybe enter a blanket and you cover yourself, so the blanket is covering the whole of you inside. So now let's say this is you, right? This is you, and this is your blanket. So you can see your blanket is covering the whole of you. So that's just how it is. So this is a very small bullish candle, while here is the engulfing candle. That is, it engulfed the whole of this small bullish candle. So that this now is called an engulfing candle. That's if it's only called an engulfing candle if it covers the other candle before it. So it engulfs. That is for a bullish candle. Same thing with the bearish candlestick. So let's do for the bearish as well. So let me write this. Here is it's an engulfing candle. Engulfing candlestick. Bullish engulfing. So here is our bullish engulfing candlestick. But still remember, our open and close is still the same for a bullish candlestick. So we open here. This was our open. This is the lowest point price went to, which is called our wick. Here is the highest point price went to, which is also called the wick, either upper wick and here lower wick. Then here was our close. This is where the candlestick closed. That is, the price closed at this point here. Same thing with this small bullish candle. We open here. This is the open price. This is the lowest point price went to. This is the highest point price went to, and then we close at this point. So we went up in price. I hope this is clear. So for a bearish candlestick, this is how it will look like, an engulfing bearish candlestick. So let's say this is our small baby candle for a bearish candle, and then this is the engulfing. So it's like the mother engulf the child. So this is our engulfing. So same psychology of a candlestick, of a bearish candlestick. We went down in price. This is our open price. This is the highest point the price went to. This is the lowest point price went to, and this is our close. So remember, this is our close. This is the from here to here. from here to here is the body of the candle. Same thing with here, from here to here is the body of the candle. These are the wicks. These are called the wicks. Wick of the candle, wick. So we opened here, we went down in price, but before we went down in price, this is what happened now. When we opened here, they were able to push the price all the way up here, right? But they could not continue pushing it up. That's why here it's the highest point the price went to. So same, then they pushed the price all the way down to this point. Now, when they push the price all the way down here, they could not continue pushing it like down like this. So then they push the price all the way up here and close at that particular time frame. So this is the time. Um this is where the close ended. So now let's do a graphic presentation of it on chart. So I'll be showing you my chart now. Let's look for this engulfing candlestick, both for the bullish and the bearish candlestick as well. So now these are my time frames. So let me go to the 1 hour so you can see how an engulfing candlestick is. So now, but color doesn't matter. Mostly our charts you mostly see red and green, but the color doesn't matter. Like me now, I'm using black and blue. So my blue is mostly my red candlestick. So it's mostly my green candlestick, while the red is my black candlestick. So it just depends on how you choose to, but color doesn't matter. It doesn't do anything in the market. Color doesn't matter. It's just based on how you decide to, give your this in more beauty. So this is just how I prefer to do my own. So now this is an example of a bearish candlestick. So this is our small so let me use this now. So now let me turn here to red to explain the candlestick properly for you. So now let me explain this engulfing candlestick again. Now for an engulfing candlestick, for a bullish engulfing candlestick, it usually engulfs a bearish candlestick. For instance, this is a bearish candlestick, right? This is a bearish candle. So this is a bullish candle that engulfs the whole of this red candlestick. Same thing with here. So here is a bullish so this is our bearish candlestick, right? This is our bearish candlestick. So that means this properly. So now this our bullish candlestick because it engulfed the whole of the red candlestick. Why this our bearish candlestick? Because it engulfed the whole of this green candlestick. So here we went up in price for a bullish engulfing because it engulfed this small one. So when you see red means sell. That means we're going down in price. And when you see green means buy, which means we're going up in price. So for a bearish candlestick, we're going down in price here because we opened at this point and closed below. So here was our open for a bearish candlestick. Here was our open price, right? This was our open price. So this was our open price here. Then we close at this point. So this engulfing candle, it engulfed the whole of this red and small bearish candle. So same thing with here. This is our bearish engulfing candle. See, it's engulfed. A candlestick it's called an engulfing candle only if it engulfs a candlestick before it's like, for instance, now this is a bullish candlestick. This one is only called an engulfing candlestick if it covers the whole of this one. That's when it's called an engulfing candlestick. So let me give you an example on chart. So our meeting is only just 10 minutes. So let me just explain. So this is an example of a bearish engulfing candle. As I told you, the color doesn't matter. So I'm using blue as my green, and I'm using black as my sell, as my bearish. So you can see the engulfing. This is an example of an bearish engulfing candlestick because it engulfed the whole of this small bullish candlestick. So this is an engulfing candle. So this is the red candlestick which engulfed this small green candlestick. So this now is called an engulfing candlestick. This like this now. It's called an engulfing candlestick. This just is now on the chart. So it's called an engulfing. That's a bearish plus engulfing candle. So now let's look for a bullish engulfing candle. Let's look for a bullish engulfing candle. So this is an example of a bullish engulfing candle here. As I told you, color doesn't matter. You can decide to put your own as pink and yellow. It doesn't matter. It doesn't affect the market. Color doesn't really matter. So this is an example of a bullish engulfing candlestick. So this is our bullish engulfing candle. So this is our bullish engulfing. This is our bullish. So this was the bearish candle, where the bullish engulfed the whole of the red. You can see it engulfed the whole of the body. So this now here is our bullish because we are going up in price. You can see it engulfed the whole of this candlestick. So this now is an example of a bullish candle. Right here is an example of a bearish candle. This is also an example of a bearish candle. So let me zoom out. So then this is an example also of a bearish candlestick. This is an example of a bearish candlestick. And that is also an example of a bullish candlestick. So this is where we're going to stop for today because I think the class is just ending in the next 7 minutes. So let me just recap from beginning to end. Let's see how far we can do it in less than 6 minutes. If you have any question, please, you can drop your question in the group. I'll get to answer everything from the group, all your questions. I don't know, probably I'll send the recording also to the group. And for those of you who have not watched the first video of what is Forex trading, how to trade Forex, at least just the basics, that first base of introduction to Forex, please, I'll suggest you to watch this video. So let me just share my screen so that, please, I'll suggest you watch this video. And let me open the video. I'll suggest please that you should watch it. So this is the video here, this particular one. So please, I'll suggest you watch it. And that's beginner journey to Forex trading part 1. So just watch it, get more insight on it. I'll also send the video link to the group so that you can watch from there as well. So let me just recap quickly. Let's see how far we can cover up. So let me share the screen again. So now let's do a recap. Now we talked about candlesticks. So we have less than 5 minutes now. On a candlestick, each candlestick, it has this form using an open, a close, a high, and a low. This is how a candlestick is formed. It has an open, it has a close, it has a high, and it has a low. So here, for a red candlestick, it's called a bearish candlestick, which is for sell. So if you see red, red means sell. Why for a green candlestick? When you see green, green means buy. That is called a bullish candlestick. Now, the psychology of a red candlestick, which is a bearish candlestick, price open above and close below because we are opening up and closing down. meaning that we went down in price, which is sell because we're going down in price. So this was our open. Here was our close. This is the lowest point the price went to. Now, let me just explain something quickly about this candlestick. So now, this market, this financial market is mainly based on, is either you're buying or you're selling. So it's either any of them, either you're buying or you're selling. So now, what really happened in this candlestick that I'm saying here is the highest point the price went to, and here is the lowest point the price went to, is because it's like a fight between buyers and sellers. There are people who are buying, there are people who are selling. So now here, when market opened at this point, right, buyers were able to push, like buyers step into the market, right? Because I told you when for a red candlestick, meaning that we're going down in price, and for a bullish candlestick, we're going up in price. But within this time frame, depending on time frame we are, let's say we're on the 1 hour time frame now, everything that is going to happen within that 1 hour, whether buying or selling, is going to form, like the candlestick is going to form at 1 hour. If we're entering this next hour, another candlestick will start again. So now here was our open. This is where the candlestick open, right? So when it's open, right, buyers step into the market and push the price all the way to this up here, right? They push the price all the way to this up here, but they could not continue pushing it up like this. They could not continue pushing the price up, 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 up. So this was the highest point, right? This is the highest point the price went to, that the buyers were able to push the market. Then sellers step into the market again, push the price all the way down here, right? Within that same time frame, they push the price all the way to this down here to the lowest point. This point, this is where they push the price all the way to. Then buyers step into the market again, push the price to this point. So while they were pushing it to this point, 1 hour was, that is on, if it's on the 1 hour time frame, so it's already close to 1 hour, maybe like some seconds or some like 1 minute, 2 minutes. They were trying to push the price up here, and then that 1 hour close at this point. So that's where the price close. So if, let's say, there is instances the price can close here based on how the buyers and sellers are like fighting in the market. So that's for a bearish candlestick. So same thing for a bullish candlestick. We opened here, we went up in price, right? We went up in price. So this was our open. Now, when we open, we didn't just go up like that. This is what happened. When we open at this point, sellers step into the market, push the price all the way to this down here. That's why we're having this week, because they push the price to this downward, but they could not continue pushing it down like this, right? They could not continue pushing this price all the way down. So they just push it to this point, and then buyers stepped into the market, push the price all the way to this up here, right? They push the price all the way to this up here, but they could not continue pushing it up. And then sellers step into the market, push the price down here, and it's closed at this point, at that time frame. If it's on 1 minute time frame, the whole of this thing is going to form in 1 minute. If it's on 45 minutes, the whole of this is going to form in 45 minutes. So same thing with the rest of the candles. So let me just show a graphic representation again. Now, I don't know if you can see here, this I'm on a 1 minute time and 1 hour time frame. So let me go to a daily. Okay, let me make it easy. Let's go to a 4 hour time frame now. Let's go to a 4 hour time frame. So I'm on the 4 hour time frame. So I'm on the 4 hour time frame. Now, let me show you something. Now, this is our 4 hour candlestick. This one single candlestick. So I'm going to use something to present it so that, so this like this. Okay. Now, let me zoom it. So we only have less than 1. So this now is a 4 hour time frame candlestick, right? Just this one alone like this. So now we're on the 4 hour. Now let's go to 1 hour. You're going to see 4 candlesticks inside this box, right? You're going to see 4 candlesticks inside this box because it took 4 candlesticks on the 1 hour time frame to form 1 candlestick on the 4 hour